Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is January 18, 2024. This is a Kickstart video where I take a look at three of the major currency pairs, including the Euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. We just saw initial jobless claims come in much better than expectations and below the 200,000 level, which is quite a feat. Lowest level since September of 2022, and then I think going back multi-decades from there. Anyway, the dollar has moved higher as a result. So let's take a look at the technicals that are driving the currency markets. Looking at the euro versus US dollar, I'm focused here on the 4-hour chart. And you can see that the price yesterday came down right around the 200-day moving average. I think we moved about 4 pips below that level at 1.0846 to a low of 1.0842. But it quickly rebounded, and we saw the price move back up toward the 38.2% retracement, but short of this. That's the last low level through here, which was a previous day's low, or actually a previous week's low. That level came in at 1.0909, and the sellers leaned against that level, forced the price back to the downside. Of course, the initial jobless claims in the data just was released has sent the price even further to the downside. And we're working back toward that 200-day moving average as the dollar gets stronger. That 200-day moving average is, of course, going to be the key barometer in trading today and going forward. Stay above it. It gives the buyers more of a hope. Move below it, and we could see a rotation back, or we should see a rotation back toward the 50% retracement of the move up from the low going back to here. This is the November low to the December high. That level comes in at 1.0827, move below that 50% level, and we start to get into this swing area through here between 1.0803, 1.0824. Let's call it support down at the 108 level. So that would be the progression on the downside. Hold the level, and this swing area right through here will be eyed again between 1.0878 and 1.0894. Followed by the broken 38.2 and the low price that we saw in last week's trading. So sellers are taking more control. We'll see if they can continue that momentum and this time get and stay below the 200-day moving average. That's going to be the key level today and going forward. Let's take a look at the dollar versus yen next. And we look at this currency pair. Again, we're looking at the 4-hour chart here. And when we look at the high price that we saw on yesterday, I've been outlining a swing area up through here that the price needed, that was a target needed to get to and through to increase the bullish bias. That will correspond with different swing lows and swing highs through here. That sort of it got a little messy here, but then reestablished support here before moving to the upside. On the way down, we tried to use this level as resistance after breaking to the downside, but couldn't do that, and then use it as support. You can see how the market shifted from being more bullish above and more bearish below. But this last test here sent the price to the downside. It wasn't until yesterday where the price moved back into that swing area between 148.45 and 148.59. The price rotated to the downside, but we came down close, or at least sniffed, this key support area down here, which was defined by the 100-day moving average and the 61.8% retracement of the move down from this high right here. That's the November high to the December low. The buyers came in early against that level, and with the initial jobs claims have helped to push the price back to the upside. This area right here remains the key support going forward. As long as the price remains above that level, the buyers still remain in control in the dollar versus yen. If you recall from yesterday's video, I talked about the trend move to the upside here, how the price had stayed above its 200 bar moving average, I should say, on this 5-minute chart. And you can see what happened in the Asian test where we started to move below the 100 trade between the 100 and 200. Then we moved below and we started to use the level as resistance. We started to use the 100 as resistance, but this last break to the upside has now shifted the bias back to the upside. So the sellers had their shot. The data didn't cooperate, and we were seeing the rotation back to the top side and above those moving averages, increasing the bullish bias again. So downside protected, upside back in control. Let's take a look at the sterling versus US dollar to complete our run through these major currencies. And if we look at the hourly chart of this, we came down and fell below this swing area through here. It looks kind of messy, But if you were to really take a close look at this, this area right through here, this yellow area right here, is home to just a number of different swing lows, and then swing highs in through here, and then back to swing lows through here, here, here. So when the price fell into that area yesterday and then fell below that level, what should have happened? We should have seen the price move lower, heading down toward this area through here, but it didn't. The market quickly rebounded back to the upside, saw the price spike up back higher, and we started the ups and downs again for the sterling versus US dollar. What we've seen in this currency pair is most of the price action has been confined to this area down here and this area up here, and with plenty of ups and downs in between. What we did see in trading here today was the broken 38.2% retrace, sort of held resistance after breaking back above the 100-hour moving average briefly. The 100-hour moving average now becomes a level of resistance at 126.91. We're also back below the 50% retracement. That level comes in at 1.2662. And if we could stay below that level, that gives the sellers more control on the downside to 61.8. And really, this floor area right through here is reestablished as support. We got to get out of this area right here. And if the price is below the moving averages, the bias remains more to the downside, below the 50% more to the downside. But we need to get below that the swing area on the downside between 1.2602 and 1.26137. So there we have it, a quick look at three of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.